Very good. Well, it's 8 o'clock. I will go ahead and begin. And I welcome you on behalf of the Living Church Institute to tonight's discussion of the churches and the CARES Act, a very recent development for us, something we're all trying to get our heads around as we seek to support the ministries of our local congregations in this very unusual and challenging time. And I want to first thank all of you. You're on this call because your local congregation matters to you, and you're serving in all sorts of different ways. Some of you are pastors, some of you are vestry members or wardens or finance chairs, and this is a time when the ministry of the church is fruitful in new ways, and it's a time in which we pray that God will equip us to meet the needs of this moment and to thrive into the future. And perhaps some of these opportunities can be part of that. I want to begin our time together with two prayers, one for this current situation and for all who are suffering, and one for us as leaders in the church for wisdom and discernment of God's will. Let us pray. O most mighty and merciful God, in this time of grievous sickness, we flee unto thee for succor. Deliver us, we beseech thee, from our peril. Give strength and skill to all those who minister to the sick. Prosper the means made use of for their cure, and grant that perceiving how frail and uncertain our life is, we may apply our hearts unto that heavenly wisdom which leadeth to eternal life. Through Jesus Christ our Lord. Amen. O God, by whom the meek are guided in judgment, and light rises up in the darkness for the godly, grant us in all our doubts and uncertainties the grace to ask what you would have us to do, and the spirit of wisdom may save us from all false choices, and that in your light we may see light, and in your straight path may not stumble. Through Jesus Christ our Lord. Amen. I want to explain a few ground rules for what we plan to do tonight. As someone noticed on the group chat, you are all muted except for David Haywood and I at the moment. And what we will do is David will first give a sort of overview of the CARES Act and the different parts of it, and he'll be using a handout that I should be able to send to all of you afterwards, which may be helpful as you discuss this with your other congregational leaders. But he'll kind of go through it, and then quite a number of people have sent questions ahead of time, and we will, I've kind of prepared those, and David's looked over those, and we'll do a question and answer session with those. And then there'll be a time when any of you who are part of the Zoom chat, part of the meeting, will be able to pose your own questions. And what I'll do for that is we'll use the hand raising function, which I'll explain how that works at the time, and I'll unmute you to ask your questions. I'll go over that when we get to that point in the meeting. I want to first introduce David to you. I know David well because he's a member of the parish that I serve here in Potomac, Maryland. He's a graduate of Dartmouth and the University of Chicago, and he's a lawyer who's worked in corporate taxes for his whole career of nearly 40 years. He recently retired as vice president of taxes at Lockheed Martin, and has been a church warden and a vestry member, and is currently the finance chair at St. Francis Church. He's in the process now of completing the applications that all of you will be completing. And so he brings a lot of in the trenches knowledge of this, as well as engagement, as he will speak about, with people at different levels of the government bureaucracy and the corporate world that are also trying to get their heads around this legislation. So David, I will turn things over to you. Tell us a little bit about the CARES Act and the particular opportunities that it presents for churches.
Okay, thank you, Father Mark. Happy to be here this evening. First of all, I'll give since I'm a lawyer, I can't do anything without a disclaimer. And so I'll say that the summary I'm going to provide is based on very preliminary review of the legislation passed by Congress and signed by the President last Friday to be exact, and a very small amount of administrative guidance that's been given as of about 2 hours ago on April 2nd. This guidance will be supplemented by the agencies administering these programs, principally the Small Business Administration and the Internal Revenue Service. And whatever guidance they've already issued may and likely will change. And so therefore, you have to be careful not to rely too much on what I say this evening or what's in the outline, and it's recommended that you consult your own legal advisor. So there's my disclaimer. Sorry, I should have said it faster, but I don't talk that fast. So there are three main benefits for churches. I assume most of us on this call are representing churches or perhaps schools, church-related schools. There are three major benefits, and then there are a few minor ones for us and some that are relevant to us personally or our congregations. So I'll mention those at the end if we don't run out of time. The first one is really the very large one, and it's called the Paycheck Protection Program, or I sometimes call it the P3. And that is a loan program with respect to which there are $350 billion, that's billion with a B, dollars in loans available. It's to be administered by the Small Business Administration, but the application process is handled by local qualifying banks. Typically, it has to be a commercial bank, but there are some savings banks that qualify as SBA lenders. So the first place to ask probably is at the bank that your congregation has a relationship with. Organizations are eligible if this is aimed at small businesses. So you have to have less than or equal to 500 full-time or part-time employees. If you have somebody who works 1/4 time, they count as one person. So think of it as 500 souls. And it includes religious organizations. That's pretty clear from the legislation. I've been working with some folks at the Diocese of Washington on this the last several days, Don Crane specifically, and there's been a little bit of activity in the last day or so about whether churches clearly qualify. And we believe the legislation is clear that churches qualify. Our outside advisors believe that as well. However, there has been a little bit of rumbling in the bureaucracy that there may be certain parts of the SBA that are not sure that churches qualify. I just received an encouraging message from the bank that we're dealing with, indicating that they have no indication that the SBA believes churches don't qualify. So there's the caveat on this that guidance could come out from the SBA, imminently, maybe tonight or tomorrow or Monday, that renders all this moot. But we're proceeding on the basis that churches do qualify for this program. The loans can be sized up to 2.5 months of average payroll for your organization. And the average is determined by averaging the last 12 months before April. So it would be April of 2019 through March of 2020. And you ought to average those. You have to exclude from that average the amount of salary for any employee to the extent the salary exceeds $100,000 a year. So for most of us, that's not a problem, but there may be some parishes where you have 1 or 2 employees who exceed 100,000. If they If their salary was $107,000, then you get to count 100,000, but not the extra 7,000. And then irrelevant for us, but I'll just mention that there's a $10 million cap on any loans under this program. I'm sure none of our congregations are going to run into that cap. The loan term is very favorable. It's a 2-year loan with an interest rate of 50 basis points or 1/2%. So it's a very low interest rate loan. Payments are held in abeyance for the first 6 months, so there are no payments required the first 6 months of the loan, and the loan can be repaid without any penalty. There are no collateral or personal guarantees required. The Small Business Administration often does require those for other programs, but not for this program. So it's a loan to the church alone and no need to put a mortgage on the property. The funds, once the loan is received, the funds have to be used for one of 7 items. And I'll go through the 7 of those. First and foremost is payroll, subject to the $100,000 per year limit on any employee. The second is health insurance for employees, and I believe that does include dental insurance. Third would be vacation, family, or sick leave. Fourth would be severance payments to the extent you're paying severance to an employee, a former employee. Fifth is rent expense, assuming the lease was entered into before February 15th of 2020. Sixth is utilities, and utilities includes electricity, gas, water, telephone, and internet access. And then seventh, interest on a mortgage or other debt that was incurred before February 15th of 2020. And that's interest only, not principal payments. So if you're looking at your mortgage payments, you need to subtract out the principal. So that's what the funds have to be used for. They have to be used for those items over an 8-week period beginning on the date of the loan. And I don't think you need to worry very much about what happens if you don't spend all the money within 8 weeks. Because the Small Business Administration will provide guidance on that. They're not trying to do a gotcha on borrowers, so I wouldn't get too worried about that. Very importantly, this loan is forgivable, and that's what makes it such a big benefit to small businesses and nonprofits. The amount of the forgiveness is based on spending over 8 weeks following the loan date. So if the loan was entered into, let's say next Wednesday, you start tracking the amounts incurred or paid during the 8 weeks starting on next Wednesday. And those are the same 7 items: payroll up to the $100,000 per year for any employee, health insurance, vacation or other leave, severance payments, mortgage interest, but apparently not interest on other debt. Now, this is a funny nuance in the statute. It might be a mistake, but you probably won't get forgiveness for interest on some debt other than mortgage interest, and then rent and utilities. The whole purpose of this program is to encourage small businesses, including nonprofits, to keep their employees on the payroll. And so the forgiveness is reduced to the extent that you either reduce the average number of full-time employees, full-time equivalent employees, or reduce salaries or wages for any employee in excess of 25% between now and June 30th. If you had laid people off or are laying people off and you rehire them or restore their pay by June 30th, then there's no corresponding reduction to the loan forgiveness. The process to apply for forgiveness has not yet been fully defined by the Small Business Administration. I expect they're going to put that together in the next 8 weeks or so, because nobody's going to be looking for forgiveness until the end of the 8-week period. So I think that's a pretty concise overview of what sounds like a complicated program, but I've seen the application form, and it's an amazing, for a government agency, it's an amazingly simple application form that consists of 2 pages. And I think, Father Mark, were you going to be able to show that to people?
Yeah, I think I should be able to. It's right here. Can you all see that screen?
Yeah, I can see it.
You can see it, yeah.
Yes.
Yeah. So, there's where your average monthly payroll goes and number of jobs. Those are full-time jobs, David, or?
No, think of them as souls. So
As
they're
think-
full-time or part-time employees.
Okay,
But they have to be employees, in other words, not 1099 or independent contractor people. They have to be people you issue a W-2 to.
and then this section, applicant ownership, probably not relevant to churches.
Correct. Yeah, I would just put not applicable or none.
And then there's a series of questions about suspensions or other loans from the SBA. Because the SBA has not granted loans of this kind to churches before, everybody's answer would be no, right?
Mhm.
And then, some questions about felonies and indictments. And so, but really very simple. And then initially that you understand the provisions. And then in this situation, David, authorized representative versus owner, what would that translate into for a church?
Well, that's a good question. I haven't received clear guidance on that, but it may be moot. What I had intended to do for St. Francis was to have the rector sign as the authorized representative, and as the owner have the senior warden sign, because the wardens in the vestry are owners of church property. At least in Maryland, that's the case. But I understand that many lenders are handling these forms by electronic means. And so it'll just be basically a checkbox on the electronic system that the form has been signed electronically.
Okay. I'm going to stop the share, and then we'll talk a little bit about the employee retention refundable tax credit, which is another possibility for churches to pursue under the terms of the CARES Act.
Right. So this is the second big benefit. It tends not to be as large as the P3 benefit. So for most congregations, I would focus my efforts on the P3 benefit. There is, however, this refundable tax credit that's meant to encourage retention of employees, and it's quite generous.
I think you paused, David. David, we don't hear you. Sorry about that, folks. I think he's left there. He's gonna log back in again. These things do happen occasionally. Okay. Oh, no. Okay. Do you want to log in through your phone? You can try that. Yes. Let's see. Let me find it here. Okay. Okay. Um, Sorry. Let's see here. Okay. Oh, are you back in? Let's see. No, I don't see you on the meeting. Oh, you're back on the internet. Can you log back in again? Yeah. Okay. Here, let me. Um, okay, hold on. Let me give you the meeting password. 230601. Yep. I think you're back. Okay.
I apologize. I have to pay my internet bill, I suppose.
So David, as you went off, you had just begun talking about the employee retention, actually the employee retention refundable tax credit. And that's kind of when you froze up. And
Right. Okay. So it's automatic. You don't have to apply for the credit. It applies through your employment tax returns, which are filed generally quarterly. The credit goes against, again, the employer portion of employment taxes. That's likely to be much less than the credit that you would want to claim. And the IRS will then issue a refund of the excess. So if the credit exceeds your employment tax liability, you'll get a refund. That will get the cash to you fairly quickly. The IRS is still working on forms for that, but they're very far along the road. I was on a conference with the number 3 person at the IRS earlier today, and they feel like they're getting up to speed very quickly here. So this credit is available for each calendar quarter that there is either one of 2 things that you qualify for. And you don't have to qualify for both. The easiest one to qualify for is that there's a full or partial suspension of operations because of a governmental order limiting commerce, travel, or group meetings, including religious meetings, due to the coronavirus. So for most of our parishes, that's going to be, you're going to qualify there. You can check the box. You don't have to worry about the second test. But if you, for some reason you didn't qualify there, there's a gross receipts test where if your gross receipts are below 50% of the gross receipts in the corresponding quarter last year, then you qualify, and that qualification continues until your gross receipts rise above 80% of the comparable quarter in the prior year. In any event, the credit is available in the first quarter after December 31st, 2019. So it's available for the first quarter of 2020, in which one of those 2 tests is met. But the credit applies only to wages paid starting on March 13th, 2020 through 12/31/2020. Now, the important part is what's the amount of the credit? The credit is equal to 50% of wages paid to employees during the applicable quarter. And wages here are taxable compensation plus group health plan expenses. Again, I think you need to back out wages to the extent it's more than $100,000 per year rate. But in any event, the credit is capped at a maximum of $5,000 per employee. So for each employee, you calculate the credit. If the credit is more than $5,000, you'd stop it at $5,000. If it's less, then you get the credit for the whole 50%. Payments, as with the P3 program, payments to independent contractors, 1099 payments do not qualify, so you're only looking at W-2 employees. And if your organization has an averages more than 100 employees, then there's a special rule under which the only wages that qualify are those that are paid to employees while they're not working. In other words, people who are on paid furlough. But if you're under 100 employees or less, you don't need to worry about that special rule, and you get the credit for employees whether they're working or not. And there, as I mentioned, there's no application required. You just have to claim it on your payroll tax return. If you're using a payroll provider, you ought to talk to them about how they're going to handle the mechanics of this. So that's the employee retention refundable tax credit.
And then, David, the third one is the payroll tax deferral.
Yes, the payroll tax deferral is, I would say, well, first of all, it's not available to employers whose P3 loan is forgiven. So if you got a P3 loan, you can still get this deferral, but if it's going to be forgiven, then you can't take advantage of this deferral. Little different rule than for the employee retention credit. Under this deferral regime, employers can defer all payroll taxes, and again, that's really the employer portion of FICA taxes or SECA taxes for self-employed people. All payroll taxes that are due between March 27th of 2020, that's the enactment date of the law, and December 31st of this year. And if you defer those taxes, they're due, half of them are deferred until 12/31/2021, the end of next year, and the other half are due 12/31/2022. There's no interest or penalty, so there's no cost to defer. And the idea is that it just gives you a little bit more cash available to keep people on the payroll. Again, no application is necessary, and the IRS is working on guidance on how to defer when you file your payroll tax returns. But again, you would want to work with your payroll provider if you're using a payroll service.
And then the CARES Act also has recovery rebates for individuals.
Yes, again, this is not going to benefit congregations organizationally, but it's going to be important to your flock and maybe important to you. There is a lot of money being spent on these rebates. They're cash payments, basically $1,200 to each individual, $2,400 to a married couple, and then $500 for any dependent child under the age of 17. There's a phase-out regime, which I won't go into the details of, but basically, if you're an individual making more than $99,000 or a married couple filing jointly with adjusted gross income over $150,000, then you won't receive any of this payment. I'm not quite sure how the phase out works for the dependent children. I think they get phased out with the parents phase out. These payments are not taxable income, and the IRS is going to send these payments automatically to most eligible individuals. If you filed a tax return in 2018, or if you've already filed your 2019 tax return, the IRS will use your banker information that you may have put on that return for direct deposit of refunds, and the IRS will directly deposit the payment in your bank account. If you did not provide your direct deposit information to the IRS, then the IRS is setting up an app available at www.irs.gov for individuals to go in and provide their bank information to facilitate direct deposit. That app is not yet up and running, but we're told that it will be in a matter of a few days. And if you have not filed a tax return, the IRS, this is new as of yesterday, the IRS will attempt to obtain information from the Social Security Administration. So this would apply principally to low-income people who are not required to file tax return, or elderly people on retirement who aren't required to file tax returns. Any eligible individual or qualifying child has to have a Social Security number. So you won't get paid if you don't have a Social Security number. And this program is not available to non-resident aliens or to dependents of another taxpayer. So a child who's over age 16 is not eligible for this program if they're claimed as a dependent on their parents' tax return.
And there are also some unemployment benefits under the CARES Act, some expanded.
Yes, and this was a matter of some late debate. This is what delayed the CARES Act for a few days last week. There were some details about this that got people excited, at least people on Capitol Hill. But basically, the expanded unemployment benefits are, first of all, that the normal 1-week waiting period in most jurisdictions for unemployment benefits has been eliminated. The federal government's going to pay the states to eliminate that. So I believe all states will eliminate it because it doesn't cost them anything. In addition, the unemployment benefit on a week.
You're frozen again, David. Let's see here. Hey, yeah, you lost it again. Did you have that number still? Or do you need me to get it back for you? It's 230-601. Okay, okay. Yep, yeah, I should. Hold on a minute. Okay, so yes, 1-646-558-8656. And then you may need the meeting ID, which is 974-290-872. Okay, thank you. So David's going to try reaching back out by phone. We think there'll be less interference from the internet there. So thanks for your patience. Okay, let me see if he joins in here. Okay. There. Okay, can you hear me, David? I'm gonna make sure you're unmuted here.
Okay, I think I should be
Yep.
should be on the telephone now. I apologize for my stodgy internet here.
Okay, that's okay. So I think you had just finished talking about the expanded, or you were in the process of talking about the fact that the 1-week waiting period had been eliminated for expanded unemployment benefits. And then that's kind of when you got cut off. So I think you were going to talk about
Okay.
the extra benefits available.
Yeah, so the benefits of unemployment insurance will now cover, at least for this year, self-employed people, independent contractors, and so-called gig economy workers.
Mhm.
And that's a big change because typically those folks had not been covered by the unemployment system.
Mhm.
So there's a huge expansion of unemployment here to deal with these extraordinary times.
And there are some other forms of relief associated with the CARES Act as well?
There are, first of all, there's a payroll credit for payroll tax credit for employers who pay required sick leave or family leave under the earlier coronavirus legislation a couple weeks ago. There were requirements to provide paid sick leave. If you do that in your employer, then you can get a credit for that. Again, you don't get that credit. You can't double dip, so you can't get that credit if you're getting the P3 loan or the employee retention credit. And then secondly, there's been an extension in the normal due date. The April 15th due date for tax returns has been extended to July 15th of this summer. And the payment of tax is also extended to July 15th without any penalty or interest. That payment delay also applies to, for those who file estimated tax returns, it applies to the first quarter estimate, which is usually due on April 15th, and that's extended to July 15th. But in a strange wrinkle, your second quarter estimate, which is normally due June 15th, continues to be due June 15th unless the IRS finds a way around that problem. So you have the funny thing where you pay your second quarter estimate June 15th and then your first quarter estimate on July 15th. But both extensions apply automatically without any action by the taxpayer. So you don't have to apply for an extension, you just get it automatically. And the IRS is providing information on how to do that. But basically, you just wait to file your return. Or if you're getting a refund, you ought to go ahead and file your return and get your refund. Some of us have filed our returns early electronically, but are waiting until July 15th to make the payment, which is also permitted. And third, there's a change in the IRA 401k rules for withdrawals. Normally, there's a 10% penalty on early withdrawals. For withdrawals in 2020, you can withdraw up to $100,000 early from your IRA or 401k without the 10% penalty tax. The income inclusion, it's still taxable to you. So you pay that tax over 3 years, and the amount withdrawn can be paid back into the account if it's paid back in within 3 years. Somewhat complicated there. You ought to talk to your retirement advisor. Employee plans, employer plans such as 401k plans have been granted authority to increase plan loans that are available to participants from a limit of, the old limit was $50,000. They can increase those to $100,000 until September 23rd, 2020. That's 180 days after the enactment date of the legislation. Fourth, the required minimum distributions from IRAs or 401ks for those who are in their 70s or older are not required in 2020. That's a change. Normally, you'd be required to take a distribution. That requirement is waived for this year only. Next, charitable contributions in cash during 2020 up to $300 can be deducted even if you do not itemize. So it's a so-called above-the-line deduction. For those who take the standard deduction, you can still deduct up to $300 in charitable contributions this year. And then there are certain upper limits on charitable contribution deduction. Those are relaxed in 2020. If you're making contributions of more than 50% of your income, that may be relevant to you. And then finally, payments and interest on certain federal student loans are suspended for the time being. I'm not sure how long that suspension lasts, but if you or someone you know is making those payments, they ought to look into the suspension. So that's a long list of.
Yes, and David has prepared a helpful handout about this. We will email it to those of you whose email addresses we have. I think we should also be able to put it up on the Living Church website tomorrow with a link to the place where the live stream can be viewed from the Facebook page. So that way, any of you who are not part of the Zoom meeting will be able to read David's summary of the CARES Act. I have a couple of general questions that have come up in the things that people have sent to us already. Um, if I'm hearing you correctly, a congregation should kind of weigh which of these provisions to use, but the P3, the payroll protection program, would probably be the place to start. Is that right?
I think so. Yeah, that's clearly the most generous program, and it's the one that you'll benefit from doing it early, because I expect there will be long lines at banks for this.
And what are the potential risks for participating in the program?
Well, I don't think there are significant risks. You're obviously disclosing some information to the bank who's processing the loan, but the information is fairly standard. You're going to need to show them your payroll tax returns, a list of employees. At least you have to show them your basically what your payroll is, and then there are a few other items you have to provide, including a list, but not copies of your utility bills. But it's a very short list of documents that you have to provide to your bank for this.
And banks may vary. One bank's list may be different from another's, or is there sort of a standard set of documents that everybody should be gathering in the next day or two?
No, there's a standard set that the Small Business Administration has put together and given the banks.
Okay.
So, and it's very short compared to what the Small Business Administration usually asks for.
And that would be a payroll, a kind of list of payroll, and then
Right. Your
you have to-
payroll reports for 12 months. Copy of your 1099s that you provide to independent contractors. A listing of all your health insurance payments. You know, the amounts you're paying to health insurance companies, and then the sum of retirement plan funding if you're using that as one of your payroll costs.
Okay. So how soon do we expect that people will know if they will receive a loan?
Yeah, good question.
Or rather, a forgivable loan.
Yeah. It's supposed to be processed within a matter of days. I've heard 3 days as being an example. The first day that applications will be accepted is tomorrow. So the earliest would be, I assume 3 days means 3 business days, but I haven't seen that specifically. So that would be next Wednesday, if you're able to get an application in tomorrow. If you haven't started talking to your banker, you ought to call your banker tomorrow morning and get on the list, and they will provide you with the form which Father Mark showed you on the webcast here. But they'll also provide you with the list of documents that you need and explain to you the process for getting those documents to your bank.
And then once it's been confirmed that you will receive the loan, how long till the money comes, do you think?
That's the 3 days.
That's the 3 days. Okay. Wow.
Yeah.
Pretty fast.
So you could get money next week.
Okay. And $350 billion, how long do you think that will last?
That's a good question, and nobody knows the answer to that. There are something like 16 million small businesses in the United States. So if each one of those received $10,000, that would get you to $160 billion. But I'm sure some of the small businesses will receive a lot more than that. Yeah. If the money runs out quickly, it would not surprise me if Congress came back and topped it up. But
Right.
I think it's more important to get in line with your banker.
Okay. I want to pose several questions that were sent ahead of time, and several of you have also added others on the Zoom chat and the Facebook feed, and I'll try to get to as many of those as we can. But Francis asked if there is at this point a specific description or kind of authorize guidance from the government about how the CARES Act applies to churches and other nonprofits?
Yeah, good question. There is not specific guidance. There's a two and a half page summary by the Senate Small Business Administration, Small Business Committee, the Senate Small Business Committee, that describes the CARES Act, and it says that that the P3 program applies to nonprofits, including religious organizations.
Okay.
There's also a summary by the House Small Business Committee that is less specific about that. I'm told that Small Business Administration will have guidance out in the next, day or so, but I haven't seen it yet.
Okay. There was also a question from Lawrence. Do you think there is any danger that if a church takes out such a loan, it will become subject to other federal laws, rules, and regulations that currently do not apply to churches? And somebody in the feed asked a similar question especially about the Americans with Disabilities Act.
I think that's very unlikely. Again, the whole purpose of this is to get the money out there quickly. And normally the Small Business Administration process requires signing up to a lot of things that they're not asking you to sign up to right now. And so I suppose theoretically there might be a risk, but I think as a practical matter, there's not a significant risk of that. Certainly I've seen nothing indicating that the government's going to take that position. And with the current Republican administration, I think it'd be very unlikely that that came out of the blue.
And you said to me before we went on the call that churches had received small business assistance grants for rebuilding purposes. Is that right?
Yes, they have under other disaster relief programs. So I think if the government was going to twist arms, they would have already twisted arms based on those grants.
I did actually speak yesterday with Jack Cobb, who's a senior policy analyst at the Episcopal Office of Government Relations, about this, and he concurred with you, David. He said that he doesn't think the loan is aiming to alter the long-term divisions between church and state, and he said that the Roman Catholics and the evangelicals are all trying to get their people to apply for these loans too, which is a pretty good indication that this shouldn't be a church-state grounds kind of problem, and perhaps a chancellor will issue a formal statement on it, but we don't foresee that as being a problem. Francis asked, could Episcopal Church Foundation or a diocese assist in this process or serve as like a wholesaler, like request loans for all of its parishes at the same time through the PPP?
I don't think so. The application process is very clearly specified as something the commercial banks are going to handle. And I think it would be awkward for a diocese to try to be kind of the intermediary. I think it's better to deal directly with your banker. I expect every church has a checking account at least, and so that's the bank to start with.
Okay. A similar question, Margaret asks, are parishes covered by the group tax exemption of the Episcopal Church? Can an individual parish apply?
The answer to that is yes, individual parishes can apply.
I'm gonna mute you.
Okay, sorry about that.
Yeah. Okay. You should be fine now.
Yeah.
Yeah.
So I know that St. Francis operates under the group tax exemption of the Episcopal Church, and that has not raised itself as being a problem here.
Okay. Similarly, Margaret asks, the CARES Act involves taking out a loan. Even if we believe the portion we use will be forgivable, doesn't a parish have to get the permission of the diocese or the bishop to take out a loan? I reached out to Don Crane here in the Diocese of Washington, and he said that this would only be needed when the property was encumbered for a mortgage, and so this shouldn't be an issue. That would be your feeling about it too. Yeah.
Yes, yeah, I agree.
Okay. A few specific questions about the PPP application. Todd asked, when it says number of jobs on the application, is that the number of full-time employee equivalents, or is that the total of all employees with each part-time employee counting as one? And I think I heard you say it was the latter, that each employee counts as one. Is that right?
It is the latter. Yeah, each employee, again, jobs think souls.
Okay. Several people have asked a question, do we include the portion of the rector's salary that is designated as housing allowance as a payroll cost? And would that be forgivable in the same way as the remainder of the payroll expense?
That's an interesting question. I would say that you ought to give it a try, including it. And the worst that happens is you're told no.
Okay.
I don't think there's any downside to including it. And maybe it'll work for you.
Someone else asked about dental insurance. So medical benefits can be included as part of the payroll expense. Would that be both kind of health insurance and dental, if dental was paid separately?
Yes, dental is treated as health insurance for tax purposes, and I think for these purposes it would be as well.
Okay.
But disability and life insurance coverage would not qualify.
Okay. Okay. What about Christmas bonuses? Do they count in payroll expense?
Well, if they're run through a W-2, then I think they would be.
Okay.
If they're not run through a W-2, which I think is probably not the correct treatment, but if that's your way of treating them, then you would not be able to claim them as a salary expense.
Okay. Can any 1099 payments be included in the maximum loan calculation?
No.
No.
Well, yes, to the extent you're issuing a 1099 in connection with rent expense or utilities, or those are the only two items I can think of that would generate a 1099, maybe, depending.
But if you pay your choristers with a 1099, or you pay your handyman, you can't count that.
That's correct.
You just have to
They're
be
treated as
deducted
independent.
Yeah.
Yeah, they're treated as independent contractors.
There was a question that applies, I think, both to the payroll cost calculation and to the forgivable amount. They're based on fixed periods, but some bills fall either monthly or quarterly and could be in or out of those dates. And so the question is, are actual payment amounts to be used, or should we calculate sort of on a pro rata basis?
Generally, if your method of accounting is cash, which is probably the case for almost all of the people on this call, you ought to look at the date that an item is paid. And some of the calculations, for example, your average monthly payroll expense is based on a 12-month average, so you're automatically going to make up for bumps during the course of the year. But other items like utilities or oil or something might be lumpy. And so my advice to you on that is pay attention during that 8-week period when the calculation for the amount of the forgiveness is being done. And if something is due on 8 weeks plus 3 days, you might want to pay it 3 days early so that the payment falls within that 8-week period.
Okay, thank you, David. Then we also had several questions about the kind of loan forgiveness issues. Father Stephen asks, his church has seasonal choir members that are paid only through May, but not during June to August. And his question is, would they need to be paid over the summer months for the parish to qualify for loan forgiveness? Or are seasonal employees not counted in the payroll qualification number? He says our singers are paid on payroll because they consider them to be part-time employees, but the singers gig out often, so they may not be on the payroll 1 week over the next. And the question is there some sort of a threshold where they're considered on payroll if they don't work a consistent number of hours or get a consistent amount of pay?
Yeah, I think for purposes of loan forgiveness, the forgiveness is based on what you actually pay during the 8 weeks following the date of the loan. So if that 8 weeks includes a period when your singers are not on the payroll anymore, then that you won't be able to count the pay you didn't pay towards the forgiveness. But in order to qualify, you're looking at average payroll over a 12-month period. So that should even out for you.
I think probably his concern was more that these singers would be usually on the payroll, but they would not be singing during this 8 weeks, presumably. And so should they be paid anyway?
I see. Yeah, well, I think if you pay them anyway, then it's not going to cost you anything if you get the loan forgiveness. So I think this is a case to be humane and pay in the example, the singers during the 8 week period, because in effect, the government's going to pay you back for that by forgiving your loan.
Okay.
But if you don't have the cash to do it, I understand that can be difficult.
Antoinette says, it's my understanding that to determine if money will need to be paid back if you get a loan for payroll, the church will need to compare the average salaries from, she gives dates here, to February 15th, 2019 to June 30th, 2019 versus February 15th, 2020 to June 30th, 2020. So like 2019 and 2020 will be the comparison. I'm not sure if that's correct, but if that is the case, what do you do if your head count is different? So in her church, they had 3 clerics in 2019 during this period. Now they have only 2. Will they be penalized for the fact that their head count has changed? And do they have to include the salaries of those people in 2019 in their calculation of average payroll cost if there's been a significant decrease from 2019 to 2020 already?
Well, the most important calculation of average payroll costs works in her favor because the average for the last 12 months would be more than the amount this month. Because you had 3 during part of that 12 months and only 2 now. If you went from 3 employees to 2 during this coronavirus period, then you may lose part of your forgiveness because it'll be treated as an employee reduction during the coronavirus period. But going from 3 last year to 2, let's say in January of this year, you wouldn't be penalized.
Right. Okay. It would be only if you left somebody go over this current period, over these
That's right.
weeks after you get the loan. Someone else asking if any 1099 payments can be counted in the amount for forgiveness. So the case they brought up was about a handyman who's still doing some landscaping, but he's not.
Yeah.
Okay.
The answer is no to that. You can't count the 1099.
If you made him a
Independent
W-2 employee, then you could count it, right?
That's right.
Yeah. Okay.
That's right. So this may be a time to, make people employees, but you probably have trouble doing that quickly enough.
Yeah, right. Marjorie says, we have some staff who are continuing to work and we're continuing to pay them, but our nursery worker and organist are paid by the week and they're not working, so we're not paying them. what should we do about them? Is there any way to obtain funds in short order to keep paying them as well?
Yeah, and that's, if these loans are made with the alacrity that has been promised, in other words, in a week or two, then you go ahead and apply for the loan. If you get the loan, I would go ahead and pay those folks, assuming they're W-2 employees, because you'll get forgiven for that amount during the 8-week period.
Right, okay. A question from Matt. Since churches don't pay for unemployment insurance, is there any way for employees of our school who've been released as a result of COVID-19 to obtain unemployment insurance or benefits under the CARES Act?
I don't know the answer to that. I think it's worth them, going to the unemployment office and asking, but I don't know of any way to retroactively get unemployment insurance for an employee after they've already become unemployed.
Okay. A couple of questions that have come up from people in the chat feed on the video conference. One I think you've already answered about the employee limit to the 100. Okay, so the question is the limit of 100K per employee, but that's salary only, right? Not health insurance and group health and dental. That would all be extra over the 100,000.
Well, there's some ambiguity on that when you I'm just looking at my notes here. In the loan forgiveness, you don't get to count the health insurance as in addition to the $100,000. So let's say you had somebody who was making $101,000 of salary, plus you're paying $15,000 for their health insurance.
Mm-hmm.
You could only get forgiveness for $100,000, not $115,000.
Okay.
In calculating the 250% of average monthly payroll, however, it seems you can count health insurance as payroll. So that increases the amount of your loan, but it doesn't increase the amount of your forgiveness.
Okay, okay, good question. Thank you. Are ordained people treated as employees for this purpose?
The answer to that is yes.
Okay. Someone asked the question, can we get the P3 loan forgiven and get the employee retention tax credit?
No, you can't. It's either or.
It's an either or, okay. Someone asked about the rector's housing allowance. I think you already said that we weren't sure about that. We should try. A question from Rowena, does the child payment include children who are in this is the child payment associated with the recovery rebates. Does it include children who are in the process for adoption but are currently foster children?
I would guess no, but I'm not sure of the answer to that. The reason I would say no is probably a foster child has not been treated as your dependent for tax purposes.
Right.
This is going to drive off of what you've done on your tax return. So if for some reason you've been able to claim your foster child as a dependent and they're under age 17, then you probably will receive a $500 payment for them. But if you have not claimed them as a dependent and they're not yet your child, I think you're out of luck.
Okay. Okay. There's a question I don't quite understand. If Mac wants to re-ask his question, that'd be fine. Mary asks, the interim final rule makes no mention of borrowers needing to prove their tax-exempt status. Do you have any information about whether evidence of tax-exempt status will be required?
No, it's not required because, excuse me, because you're eligible whether you're tax exempt or not.
Okay. There's a question from Margaret. You mentioned that non-resident aliens are not eligible for $1,200 individual rebates. Would this ineligibility also include a church employee here on a work visa who pays income taxes to the US government?
I believe that someone here on a work visa is treated as a resident alien. Excuse me.
Okay.
Yeah, I believe a work visa makes you a resident for tax purposes.
Okay. Chuck says, our church bylaws require vestry approval for all lending. Could an estimate of the PPP be presented for approval to a vestry?
Yes, I think so. I think that would be, it'd be a matter of whether your vestry is comfortable with that. But it wouldn't shock me to see a proposal for, applying for a loan of approximately X dollars, plus or minus 10% or 20%.
Yeah, we had our vestry meeting on Tuesday to do this over Zoom, and we you gave an estimate, and then we sort of approved you to make it happen, basically.
Right.
Right. Marianne says, I was on a call yesterday with Tom Rainier, and an accounting group they were working with said to include housing allowance as part of salary. That was what you had also recommended. Does the loan cover the employer portion of Social Security? So federal, the FICA Medicare, and will it be forgiven as well?
I'm thinking about that. I hadn't considered that, so I don't know the answer to that.
Okay.
Again, I would include it in your average monthly payroll calculation for purposes of the size of the loan, but for purposes of forgiveness, I'm not sure. I think it probably would not count, but I'm not positive of that.
Okay. I think you might have said before that the FICA Medicare is not supposed to be counted. It's only state payroll taxes
Oh, you're right.
in the amount you apply.
You're right.
Yeah. Someone says, our payroll company has a report for the P3 program that includes the monthly payroll for 2019. Do I need to request one for April 19 to March 2020? So this question of which 12 months do you use?
Yeah, the rule is very clear that it's the 12 months before the date of the application. So if you're applying in April of this year, you need April through March of last year and this year.
Okay. And then Joe says the PPP instructions, I noticed this too, state that for the purposes of calculating the average monthly payroll, I think it says most applicants will use the 2019 monthly payroll. So
well,
I'm not sure about that.
Yeah. I'm not sure whose instructions those are.
Yeah. So Max says, if the year history is from April 1st, 2019 to March 31st, 2020, and we did not have a rector until November 2019, can we adjust the rector's salary for the full year?
And in effect, annualize it. I don't see anything in the statute that permits that. There is a special rule for seasonal businesses. For example, if you're in the Christmas tree business and you only have sales, 2 months out of the year, then there's a special rule for that. But I haven't seen a special rule for, kind of special staffing situations.
Okay. All right. I was able to see more responses on the Facebook page. It appears to have frozen. But I will certainly, we'll open things up to additional questions. If you look down at the bottom of the page, there's a place that says participants. And you're welcome to use the function in there that says raise my hand. It's a hand. And if you do that, I'll see who you are and I'll be able to unmute you so you can ask your question. Does anyone have an additional question? All right, I can try unmuting all if anybody wants to ask one.
Right. Okay, but I'm saying that these are tools now to develop material and customize it for each day.
Would anyone like to ask a question? Okay. All right. Well, that may let me wrap things up for tonight if I'm not able to pull any additional questions off of the Living Church website.
Can I ask one? Can you hear me?
Sure, of course. Yeah.
What are the conditions for the loan being forgiven? The P3 loan?
David? Oh, I think he may have gone.
No, he's still there. I see him.
He's still in?
Okay, how about? Okay, am I there now? Okay,
You're there. Yeah, you're good.
I can't hear you, Father Mark,
Oh.
but maybe people can hear me.
The question was, what are the conditions?
Conditions for forgiveness are that you spend the money on the 6 enumerated items, or the 7 enumerated items: payroll, health insurance, vacation, severance payments, mortgage interest, rent, and utilities. And that's pretty much it.
There was a question from Mac.
I can't hear you, Father Mark.
Oh, sorry. Mac, you want to ask your
I just want to say thank you, and it was a good, conference call. And thank you for your time and efforts.
You're welcome. You're welcome. Louis, go ahead.
So I had a further question. I had heard that the SBA is also providing disaster loan assistance specifically for COVID-19, through which congregations and nonprofits can recoup if you have tenants that don't pay their rent. That would be a disaster loss, and also if you have a provable discount in the contributions that come during this period, a loss of income, that you would be able to apply for disaster assistance, which is a loan. And is that true? And do you know about that? And how do you go about applying for that?
That is true, and you would also talk to your bank about that. I think it's likely that that will be less attractive to you than the P3 loan, and you can't do both.
You can't do both, even though they're not going to be covering the same things?
That's correct.
Okay.
Any additional questions?
Thank you.
It's been wonderful to have all of you with us tonight. We hope that you will continue to engage with the work we're doing during this coronavirus crisis with the Living Church, both providing news coverage, theological reflection pieces on the Covenant blog, a variety of podcasts about theological issues, ways to reflect, practical things like homeschooling and dealing with anxiety. We're trying to do what we can to equip the church for her ministry in this challenging time. And again, thanks to all of you for your role in leading your own congregations in a really challenging, but I hope also a fruitful time for our common work. So God bless you, stay safe, stay well, and I hope we see each other again.